Hi guys, it's Stock Curry, and in today's video we're going to talk about what to expect for the jobs report numbers on Friday and how they can move the markets. I also have a lot of stock specific news that caused a lot of stocks to move today, both during the day and after hours. So let's get into it! Okay, when it comes to the jobs report numbers on Friday, this is going to be one of the most heavily watched jobs report numbers ever. This is very, very, very highly anticipated because depending upon what these jobs report numbers are, it will determine whether the Fed is going to become more hawkish or more dovish. Now, if you don't really know what those terms mean, dovish is basically where the Fed is quiet, kind of laid back and saying, you know what, we don't really want to raise interest rates or hurt anything because we don't really want to hurt the economy. Hawkish is when the Fed becomes like this big predator bird and the Fed is like, go in there and raise interest rates and sell off our bonds and just go after it. And so that's basically what it means, hawkish versus dovish. So yeah, know those terms if other people talk about them as far as what that means for the Fed. So hawkish means they're going to be more likely to raise interest rates. Dovish means they're less likely to raise interest rates. Now here's why that's important as far as the jobs report numbers, is it's kind of a little bit of an inverse of what you might think. So if the jobs report numbers on Friday are good, that could be bad for stocks, because what that means is the Fed would become more hawkish, meaning the Fed would see the economy is stronger and they would say, hey, unemployment's going down, more people are finding jobs, we can go ahead and raise interest rates without having to worry about hurting the economy. And so that could cause stocks to go down on Friday. Now, if the jobs report numbers come out and they're bad, say unemployment goes up or the U.S. just did not add that many jobs, that could cause stocks to go up even though the jobs report numbers were bad, because now the Fed might be a little bit more dovish and the Fed might say, you know what, maybe we shouldn't raise interest rates quite as aggressively because the economy isn't as strong as we thought it was. So keep your eyes on that. Now, as far as the actual numbers, as far as our break-even price, economists are expecting the economy to have added 422,000 jobs in December, and they are expecting the unemployment rate to be 4.1%. So if it's any higher than that, we can expect the markets to go down. If it's any worse than that, then we can expect the markets to go up. Okay, let's get into the individual stocks because I have a lot of stock-specific news to talk to you guys about today. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stocks for you. Every day I spend hours and hours and hours watching videos from the top finance channels, and then I consolidate all of their stock picks and I put them together into a single video. I give you both the cliff notes on the stock picks as well as my analysis on the stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who they talked about it and then go watch their video to get the full details on what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and click the bell icon and click all so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. Before we get into today's stock picks, I do want to remind you that I'm not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. Please do your own research before investing in any asset. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use for all of my videos. If you'd like to get 2 free stocks worth up to $3,300, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull will send you 2 free stocks worth up to $3,300. All right, let's do a quick update on the $1 Million Challenge portfolio, and then we'll get into the stock picks. All right, the $1 Million Challenge portfolio did not do well today. We're actually down about 7.5% in this. Part of the reason is because on Monday, when we purchased most of these bullish positions, the stock market was extremely bullish. And then on Tuesday, it did a complete 180 and went completely bearish. Now, we were able to open up a QQQ put position yesterday that ran up 300% and helped get this portfolio up yesterday, even though the overall market tanked. But today, with the market running flat, we weren't really able to do any hedging. And so really everything that just kind of decayed a little bit. Now, regarding where we stand right now, we do have the F vertical spread, which is currently at max profit, but if F runs up anymore, we're going to end up losing money on this. PFE is currently at max profit, and SOFI is also currently at max profit. AAPL and TSLA are currently at max loss, and so we are going to have to, unfortunately, take a L on these unless we get a major run up in the markets. If, Apple or Tesla run up 5% tomorrow, we'll we'll be back in the money, but for the most part, it does look like we're going to lose money on these. Now, with all of these, we are going to have to close these before the market closes on Friday. The reason is because Webull will actually close these out for us about 30 minutes before the close if we don't close them out before that. So at least an hour before close, I'm going to have to close these out. Now, regarding what we have to close out tomorrow, it's going to be the F right here, which is expiring tomorrow, the AAPL and the TSLA. Those are the three that expire tomorrow that we're going to close out. We'll see what happens. We could end up losing money in all of these, could end up making money. I don't know. It really all just comes down to the jobs report and what happens in the markets tomorrow. But we shouldn't lose too much more money because we're already sitting almost at max loss on the big ones. So if we do go down, it might be a little bit, but I don't think it'll be too much. There is something I'm looking at buying tomorrow, which we'll talk about here in a minute. But other than that, the only other thing I did today is I did sell the AMD one for near max loss. I actually sold it about $2 outside of a max loss. And I put a video up on TikTok to show you guys kind of how you would close these out. Because a lot of people asked, okay, you showed me how to buy them, but you never showed me how to close them. So I put the video together today on AMD to show you how to close them. If you want to watch that, it's over on my TikTok. I've got a link for TikTok down in the description of this video if you need to learn how to close these out. All right, let's get into the stock picks. And first up is AFRM. This is Affirm Holdings. A lot of people have been asking me about AFRM. Volume spiked on Wednesday with volume about 4 times higher than normal. The stock dropped over 10% on Wednesday, yet despite that, there were a lot of people who were placing bullish bets on the stock. One whale, about $5.5 million were the bullish call spreads for February. Now, the crazy thing is there was no news on the stock. And fundamentally, the stock remains very expensive with a price to sales ratio of 28. Further, the technicals remain bearish and AFRM is straight up a falling knife right now. So I have no idea why people are bullish on this. I can see that we do have some resistance at around $70 and it looks like AFRM will drop down to that price. Now, regarding that bullish call spread that was purchased, I think they bought the option in anticipation of a short rebound back to the 10-day EMA at $92. After all, just today alone, that option spread was up 14%. So whoever bought those options made $770,000 today. And next up is BYND. This is Beyond Meat. BYND was up over 14% on Thursday after announcing that KFC would be selling their chicken. This is one that we're really going to have to watch because BYND is a heavily shorted stock with short interest at 28% and utilization at 95%. Now, you might think that shorts would have started covering on Thursday, but actually the complete opposite is true. As we can see here on Fintel, the number of shares available to borrow actually decreased on Thursday, which means shorts are getting ready to increase their positions. Now, whether or not BYND gets a short squeeze is going to depend upon a couple of factors. First is how much interest the stock gets in Wall Street Bets and Reddit, and whether or not retail traders jump in. If they do, it could cause the stock price to rise, which in turn could cause the short squeeze to trigger. Now, technically, BYND is still bearish, with no confirmation of a rebound whatsoever. So if we don't get a lot of buying from retail traders, then BYND will most likely just keep falling. The fundamentals aren't great. The price to sales ratio is still high at 10, but that is about 33% lower than most high growth stocks trade at. Meet Kevin said the fundamentals aren't terrible, and he can see why the stock was being bought up on Thursday, but he gave no indication that he himself was interested in buying the stock. German with financial education, on the other hand, bought over $100,000 worth of BYND on Wednesday. Personally, I'm just going to keep my eye on this one and keep it in my watch list for now, and let's see if it starts to rebound or not. Next up is CFVI. This is a SPAC and they're merging with Rumble, which is a video platform similar to YouTube. CFVI has been running up lately after Matt Kohrs, the YouTuber famous for keeping people informed about AMC, signed a contract to make Rumble his preferred platform. Matt Kohrs will end his Patreon and move to using locals from Rumble for subscriber-only content. Now, it should be noted that the nominal value of CFVI is only $10. So if you buy CFVI at the current price, you are paying a 20% premium to the nominal value. Now, that might be fine if you think Rumble will grow significantly. The technicals are also turning bullish, and the MACD is about to form a golden cross. So technically, now would be a good time to buy CFVI. I wouldn't swing trade this though. I would only buy CFVI as a long-term hold. Also, if you want to follow me on Rumble, I cross-post all of my YouTube videos over to Rumble, and I'll be using Rumble if my YouTube channel ever gets taken down for any reason. I have a link to my Rumble account in the description of this video. Next up is DKNG. This is DraftKings, and they're an online sports betting company. DKNG ran up over 5% on Thursday after it was announced that New York will be opening up sports betting on Saturday. Also, StockMo let us know that ARK Invest bought more DKNG on Tuesday, as you can see here on the Lucid tracking. By the way, if you want to know what tools I use for researching stocks, such as Lucid tracking, I have a list of all the tools I use on my resources page. You can find that at stockcurry.vip/resources. Now, despite the recent bullishness on DKNG, it remains technically a falling knife. Today's run-up was not enough to get the candle back above the 10-day EMA. DKNG also remains a little pricey fundamentally with a price-to-sales ratio of 12. So while I sold all of my DKNG back when it was in the 50s, I do plan to buy back in once DKNG drops down to this next support level at $19. Next up is DWAC. This is a SPAC that is taking Donald Trump's social media company Truth Social public. DWAC ran up 20% on Thursday after news came out that Truth Social would be launching next month. Now, Meet Kevin said the fact that people are buying DWAC is a good sign that people are going risk on, because that could mean that stocks that are popular amongst retail investors will start rising again. That said, Meet Kevin thinks this is a big mistake to hold DWAC, and I agree. DWAC only has a nominal value of $10 because that's how much the SPAC is actually worth. So people who are buying DWAC at $60 are literally paying 600% more than the stock is worth. That's like paying $300,000 for a car that's only worth $50,000, or paying $1.2 million for a house that's only worth $200,000. I mean, Tesla's currently trading at around $1,000. If you wouldn't buy TSLA for $6,000 right now, then why are you buying DWAC for $60? The stock is only worth $10 fundamentally, and one day this stock will fall back down to its fundamental value. Now that said, I do want to clear up some FUD surrounding DWAC. There was some confusion after it was reported that a SPAC might not get enough votes to merge. The media did a terrible job reporting the news and made it sound like this was related to DWAC. In reality, the news was on a different SPAC, DWACU. DWACU is merging with a different company and is not related to DWAC outside of having the same management team. And next up is FAS. This is a triple leveraged financial bull ETF. StockMo listed FAS as an alternative to investing in specific banking stocks. Because this is a 3x leveraged ETF, you have the opportunity to make a ton of money in 2022 by buying this. As interest rates rise, banking stocks will see higher profits, and their stock prices will rise as well. FAS will allow you to make 3 times as much money as just buying banking stocks separately. It should be noted, though, that because this is a 3x leveraged ETF, you will also lose 3 times as much money if banking stocks go down. But given how I think banking stocks will be the best performing sector in 2022, with some banking stocks doubling in price, I do think FAS will more than double in price in 2022. So I really think you have a good opportunity to double your money in 2022 with FAS. Next up is GME. This is GameStop. GME ran up 23% after hours on Thursday after announcing that they were entering the NFT and cryptocurrency markets as part of their turnaround plan. GME has hired 20 people to develop a marketplace for NFTs so that gamers can sell virtual game goods such as avatar outfits and weapons. GME plans to launch the marketplace later this year and is currently developing partnerships with cryptocurrencies and game developers to make that happen. The run-up after hours on this news also caused AMC to run up after hours, but just know that the rise in price on AMC had everything to do with the rise in price on GME and nothing to do with any news or change in the story on AMC. Now, Keen and Grace warned that GME might drop back down after today's run-up. This is not necessarily an indication to go out and buy the stock. And next up is LRC. This is Loopring. This crypto ran up a few months ago on rumors that they were going to be working with GameStop to sell NFTs. Now that it's been confirmed GameStop is working on an NFT marketplace, keep your eye out for a run-up in LRC. LRC fell this week along with the overall crypto market, but when the GameStop news was announced earlier today, LRC spiked upwards before giving back most of its gains. So clearly people are aware that LRC might run up with a GameStop partnership. Just keep in mind that GameStop's NFT platform won't launch until the end of this year, so you'll need to be patient and hodl if you buy LRC. And the last stock we're going to talk about today is LCID. This is Lucid Group, and they're an American EV manufacturer. The early investor lockup period for LCID is on January 19th, or a little less than 2 weeks from now. That could put significant downward pressure on the share price, just like we saw during the first lockup expiration in LCID back in September, back when the PIPE lockup expiration happened. During the September lockup expiration, LCID fell 11%, and it also fell for the 2 weeks leading up to that lockup expiration. Now, this lockup expiration will be much worse. Early investors hold 73.4% of the outstanding shares. So we could see a major drop in LCID when this lockup expiration occurs. This would be a great stock to buy for a straight put option, and I will probably add a straight put option to the $1 Million Challenge portfolio on Friday. Now technically, LCID has very strong support at $36.50. So once it breaks below that support level, we could see LCID fall quickly. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what your favorite stock pick is. And if you want to join a free community of traders where we discuss stocks all day long, you can join the free Discord. I have a link for it at stockcurry.vip/Discord. That's stockcurry.vip/Discord. You just have to apply to be in the Discord, but the truth is, every single person who applies gets in. I just have the application there to help prevent scammers. Now, if you are looking for a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull using my link in the description below and deposit just $1, Webull's going to send you 2 free stocks worth up to $3,300. Now, if you're not a U.S. resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is the best trading platform for non-U.S. residents. They have the full suite of options trading over there, and if you sign up for either Webull or Interactive Brokers, you're going to get the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. There's no limited aftermarket to pre-market trading on either one of those platforms. I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.